Technicals are dynamic and in constant change. In this episode, we will dig deeper into the Realfiction technicals and further clarify the bigger picture. We will also lay out a very important framework of how to approach trades like this. As this is an important trade to me personally, I will now follow it up more closely. But before doing that, there are some very important things I need to emphasize. First of all, I cannot stress it many times enough that this is not financial advice. You must do your own research and due diligence prior to any investments, whether in Realfiction or in any other stocks or equities. What I do on this channel is to merely present my own personal thoughts and technical reasons behind taking any trades whatsoever. For several people have reached out to me via email and private messages lately asking for advice on their Realfiction trades. First of all, I greatly enjoy speaking to you all and I thank you all for contacting me. But as much as I may want to help each and every one individually, I simply can't, for I'm not a financial advisor and I'm not allowed to give any personal investing advice. All I can do is to present my own lines of reasoning based on my own personal circumstances and then hope that it will equip you to better reason like a trader. But in the end, as all trades are discretionary and circumstantial, you will have to put the pieces of that puzzle together yourself to fit your own trading prerequisites. Now, as mentioned in the previous episode, I have taken a big position in Realfiction myself, big enough to amount to the second biggest position of the year. But that does not in any way mean it will turn out profitable, for there are absolutely no guarantees in trading. It simply means I like the technical case and the risk to reward. For just because you were to get paid 4 times your wager when you win at flipping a coin, it doesn't mean you'll know when you'll win. It just means you will be well rewarded in the long run because the payoffs grossly surpass your losses. The exact same principle applies to this trade. And to be perfectly clear, whatever technicals I laid out in the previous episode may at short notice be altered, tailored, or even disqualified if or when the technical map were to change. For as mentioned in detail in this now mandatory episode, trading is not static. It's dynamic and it's discretionary, and for that reason good technicians change their mind all the time as new technical data emerges. For falling in love with a conclusion will quickly land you in the poorhouse. And just because there are no clouds on the skies right now, it doesn't mean it cannot rain in 2 hours. Having said that, I still stand by everything I said in the previous episode. The technicals still look strong and I am hopeful about this trade. My point with this is that any stop losses, targets and overall technicals I outlined in the previous episode were all based on the technical map at hand at that moment. If or when the technicals were to change, I may or will adapt to them as well. I will float along like water and it may happen fast. But for now, let's move on to the technical updates. Typically, a steep retracement like this should set the scene for an equally steep ride to the north for it to be technically valid. What I normally wouldn't like to see is for some weak sideways movements in the upcoming month or so. That on its own would be enough for me to call this trade a day and move on. For that would be equivalent to idling your Formula 1 race car until it runs out of petrol and you have no fuel left to actually go anywhere. However, the following observation goes on to prove the complexity of trading and how each situation is unique and requires discretionary skills to interpret them successfully. For as a trader, I want nothing else but for the price to have a rapid 100% run up or so. This would be great for me as I look for the highest returns in the shortest time possible. But as good as it would be for me, it wouldn't be particularly good for the stock long term. For stocks rarely drop by this much and as steeply as this just to pick it up at the bottom and make a quick new all-time high. There's just too much damage done for that to occur. I'm not saying it can't. What I am saying is that it's statistically unlikely. For just like you don't buy a lottery ticket expecting to win £1 million, it doesn't mean it cannot happen. It just means it probably won't.
I've got so many tickets I can't lose.
The first number is 17.
Hence, a steep run-up wouldn't benefit any long-term Realfiction investors, but would rather pave the way for some unnecessary volatility. What would benefit those on the other hand would be if this well-established rounded bottom were to unfold in full. This would amount to a possibly solid recovery, as this entire move would be of an accumulation phase nature. This rounded bottom on its own acts as support, and I will not look likely upon breaking below this one. That would be a cause of concern and attention, one which will likely force me to take some sort of action. Moving on, we just had a lower bullish red close on the daily. This on its own is of an additional bullish nature, as it is textbook behavior for a further move up. If we look at the previous two lower bullish red signals, we find one in early April, just after the Corona bottom, upon which the price took off by an impressive 715% in just 5 months. And in the case preceding that, the price went up by 70% in 2 months alone. Now, the only downside with the Realfiction RSI lines is that they're still tentative, as we still haven't been able to confirm them with accumulation and distribution pivot levels. But despite this, they still seem reliable enough. But the good thing is that the lower bullish red lines tend to be more statically biased towards 40 than that of the upper bearish blue. For the upper bearish blue line is the most critical and discretionary of them all, as in the one that requires the most effort to get right, as it is also the most important of them all. In this case, I will cautiously treat it as a touch. But as the trade on its own wasn't based on this line, I will treat it as a very pleasant bonus, but will not adjust my stop losses to any closings below the lower bullish red line, as would be the case in any RSI based trade. For more on this, please watch the RSI trilogy. Now, given the rounded bottom, we might very well be in for a double bottom of sorts. In a sense, this might be a good thing, as there seem to be many people who feel they missed the boat. But here's where things get a bit complicated. For having detected this rounded bottom, a close below it may cause some temporary confusion, as the validity of this rounded bottom would need to be established. By this I mean that despite this rounded bottom having 6 touches so far, it may still prove to be just noise. But if it's not noise, then any break below it would be bad news. In a sense, determining the validity of this rounded support is as critical as cutting off the right cord from a bomb, just like MacGyver. Regardless of what, I will proceed with caution, and depending on the strength of the index and the individual technical developments in Realfiction itself, I will be just as ready to add on slightly as I will be to release everything should the technicals display any coherent signs of turning sour. The latter would primarily be if there were to be some dire technical reasons for it, such as a huge sell-off candle accompanied by huge sell-off volumes, or if the index were to suddenly turn on us. Luckily though, it shows no such tendencies at the moment. In fact, I would rather say that the index finally has begun to display signs of the long sought after health. But again, we're not entirely there yet, but it does look promising. And speaking of which, the index is now trading at the top of this range. A northbound breakout from this, one that stays above it, could very well be the explosion needed for the index to begin a parabolic run. This doesn't necessarily mean it would just fly off to the moon tomorrow. Put metaphorically, rather look at it as a possible foot of the mountain. Another sign of strength would, as discussed in detail in the previous index episodes, be if it were to hit its 1.618 fib, retrace and retest the previous all-time high upon which it will find support. Now, let's not over-speculate on possible strength scenarios, for there are more than we can count. My point is that the index is beginning to look healthy. Let's just hope it stays that way, as it will greatly impact any other stock investments of ours. That was all for now. Thank you and goodbye.